Welcome to Home Buying Made Easy. I am Michael, and we are here. This podcast is designed to talk specifically about how you can buy a home easy. And what we strive to do here is educate you in such a way that you don't have to deal with all the terms and wonder what in the world does this mean or that mean, and all the things that go into the home buying process, which seem super stressful. And just break it down and make it super easy. So shout out to all you first-time home buyers too, because y'all are like the reason we're doing this. The reason we started this is because we wanted to make sure you were educated in the process. And I have Rachel here with me, and Michael, and Rachel is here. She would be considered a first-time home buyer. So she's a good fit for being able to ask the questions, because she's like, I wonder about that. And that's kind of where we are.
Yeah.
So take it away, Rachel. What are we talking about today?
Yeah. We're going to start today with a basic, like, what is a home loan and what are the home loan types, just to cover the bases if we haven't covered it in a previous episode.
What is a home loan? A home loan is a mortgage. A mortgage is the fancy word for it. And basically it's where a lender is willing to take a percentage of their money and basically put it down for you to use as you want to purchase a home. So you want to purchase a home that's, let's say it's the home is $300,000. Well, you probably don't have $300,000 in your bank account to be able to pay cash for it. So you have decided you're going to go to a lender and ask them to front the money for you, or at least a portion of the money. They're going to come back, give you some requirements, things you need to do to be able to get that money, get pre-approved, have a job, good credit, that kind of stuff. And then they're going to also ask you for a down payment. This is your part, the skin in the game part. So hopefully you have saved up that amount of money for the down payment to be able to afford to purchase a home. That home purchase is then spread out over a period of time. So rather than, and kind of like a car loan, you get a car loan and the car's, $20,000 and you pay for it for the next 4 years. Well, the same thing's true. The interest is calculated a little different, but the same thing is true on a mortgage. It could be for 10 years, 15 years, 30 years. They're actually pushing right now in the administration for going to a higher number than 30. And there's pros and cons on that. But the bottom line is making sure that a client, a person that's trying to buy a house, has the funds provided to them by the lender to purchase that home. That's what a home loan is. Yeah. Second part of that question was about the types of loans.
Yeah.
What are you referring to there?
So conventional, FHA, VA, USDA.
So what does that mean? And that kind of thing. Okay. So a vast majority of the loans in the United States are conventional loans. A conventional loan is a loan that is basically able to be sold on the market, on the mortgage-backed securities market. Could be to Fannie or Freddie. It could be to another investor. They are high-quality loans. Basically, people with good credit that have put money down, they fall into these buckets, and these buckets are conventional loans. They have certain requirements. They have a top debt to income ratio. They have a bottom credit score that they go by. And if you fit inside that bucket, then you would most likely get a conventional loan. An FHA loan is a government-backed loan, which is also a good opportunity for first-time home buyers. And then also there are situations that people are sometimes credit challenged. And when they're credit challenged, an FHA loan may be the bucket that they end up going into. VA, the VA loans that I typically do, they have vast majority of them. They have A credit. They have conventional type credit, but they are choosing to exercise their right to use the benefit, the VA home loan benefit, which affords them no private mortgage insurance. They don't have to pay mortgage insurance, private mortgage insurance. They don't have to have a down payment if they don't want to put one down. There's certain caveats that they do have to put a down payment down, like if they've already used it and they're trying to use it again. Sometimes they have to have down payment. But if it's just the first time they've ever used their loan or their mortgage, or their VA loan, then at that point they can go out and they do a no down payment loan, 100% loan. USDA is a 100% loan as well. They have different guidelines and criteria, more in line with the conventional type criteria. They have lower debt to income ratio limits. They also, in some cases, have income limits. So those are probably the four that most people talk about, but there are a lot of other ones. There's a new one that's we're getting ready to really start, I guess, promoting or giving people this option. It is actually a HELOC, which is a home equity line of credit, but it's for the first mortgage. It's a faster way to pay off your mortgage. And there's only a certain types of people that can fall into this category, because you have to be very careful considering it's actually a home equity line of credit.
Right.
But it's a home equity line of credit for the entire mortgage. It's very interesting. So that's we didn't even talk about that, but that's a different one. There's also people that they've just gotten out of bankruptcy, or I had a guy call me yesterday who is in the middle of a bankruptcy. Like he's in a Chapter 13 bankruptcy, and he called, said, "Hey, is there anything you can do for me?" And yes, there are mortgages out there for that.
Yeah.
Now it's not a conventional, it's not FHA.
Yeah.
It's not the normal, but yes, there are opportunities where people can get into a loan, even after a bankruptcy or bad credit, or maybe as a bad situation that they found themselves in, and now they're trying to dig their way out.
Yeah.
There are opportunities sometimes for that as well.
Yeah.
Oops.
He's kicking the mic. Okay. So last question, who do I talk to first?
Who do you talk to first? I would say in the home buying process, as a rule, the first person you probably need to talk to is your loan officer. If you don't have a loan officer, give me a call. I'll either get you connected with one, or if you're in certain areas, I'll be your loan officer. But the bottom line is you need to talk to the loan officer first. Go ahead and get a mortgage application going and start the pre-approval process. There's no way to know where you're at or what you're doing and what you qualify for, or anything, or even where you're at credit-wise, until you start down the road and with the pre-approval process. So that's probably the most important person to talk to first. Then you can start looking at talking to realtors and talking to other people, maybe start shopping for houses and stuff like that. So does that help you answer the overarching questions for home loan types?
Sure does. Home buying made easy.
See, that's what we're here for.
Yeah.
Another episode of Home Buying Made Easy, brought to you by Michael, and Rachel's here too. Oh, I said your name. By Michael and
Rachel.
We'll see y'all next time.